Wonderful. I think we are live. Hi, everybody.
Hi.
Really great to be here this morning. And my apologies, my first experience with this platform. So hopefully we can move through this quickly and efficiently. Maybe we give another minute for people to kind of filter in. I'm just looking at all the attendees. Really great to have you here. Please feel free to fill out the poll, number 1, and 2, if you want to drop in the chat where you're coming from. Any questions you might have. I think we are live. Hi, everybody. Please do free to just introduce yourself really briefly, and we'll give another maybe 30 seconds for people to filter in.
Obiano, I'm on. Please come on. I need to get this thing up.
Hey, Akinya, how are you?
Hi. Good afternoon. How are you?
Good. We're just
Yeah,
letting
good
people.
to be here.
Thank you. Yeah, glad you could get in. I know it's a little bit tricky getting in the system.
Yes, it is. Hi, Folu. Hi, Eleni.
Hey, how are you? Yeah.
I'm doing good.
Great.
Wonderful.
I was on mute. Hi, Akin.
Great. Well, let's kick it off. We do have the full 50 minutes for this session, which I know will cut into people's break a little bit, but appreciate you guys being here. Just gonna give a quick overview of the day or the hour we have together. We are going to start off with some introductions, a little bit of an overview of the state of ag in sub-Saharan Africa, as well as the opportunity for financial services within that realm. And then we're going to dive into some questions that I've prepared with some of the panelists, and then we'll open it up to Q&A from everybody. So in the meantime, please do feel free to drop in any questions you might have in the Q&A tab over to your far right in the screen. And we will make sure to log those throughout the conversation. I might pull into them. Otherwise, we will also use this during the final section. We're going to Q&A. So thanks everybody for joining. Just for a round of intros, my name is Timothy Ran. I'm the managing partner at Mercy Corps Ventures. We're a global impact investment fund housed within the NGO Mercy Corps. We invest primarily in AgTech and FinTech, or as we're saying now, Ag FinTech, because they tend to be blending together. We have made about 26 investments globally, about half of those in sub-Saharan Africa, and of those mostly in Ag and FinTech. So very excited to be here. I'm going to go around really briefly and just introduce our panelists and then let them really introduce themselves. So starting first, we have Dr. Eleni, who's the founder of the Ethiopian Commodity Exchange and also Blue Moon AgTech Incubation. We also have Akinya Akintunde, the VP of Financial Markets at Afex Commodities Exchange, and then Folo Okunade, the COO at Hello Tractor. So perhaps we could start with Eleni. Would you be able to introduce yourself and Blue Moon AgTech Incubation?
Yes, hi, thank you, Tim, and great to be here. I'm Eleni Gabrameddin, and I'm the Chief Happiness Officer of Blue Moon, which is Ethiopia's first youth agribusiness and agri-tech incubator and seed investment platform. So we have over 3 years that we've been up and running. We have incubated in 2 batches per year. We've incubated a total of 87 startups. About 25% are in the fintech space, but as you said, ag fintech, which is a nice way to put it. But yeah, so we're very excited, and our model is basically to take early stage, idea stage startup teams and turn them into an investable company and then launch them for investment and start up the company. So that's been our model. It's been a crazy adventure. We've learned a lot, but it's going pretty well.
Wonderful to have you here. Perhaps next we could go to Akinya Akintunde from Afex. Oh, I think you're on mute.
Hi, team. Hi, everybody. Good to be introduced once again. My name is Akinka. Work from Afex Commodities Exchange in Nigeria. I'm the vice president in charge of financial markets. For us at Afex, our role is to bridge the gap between smallholder financing and the capital markets, and we draw our inspiration from the role agric plays in the country and in the continent as a whole, right? As we are aware, agric accounts for over 20% of the GDP of the continent, and yet consistently we see this sector heavily underfunded. And the issues are real because most of the smallholder farmers in this part of the continent don't have access to basic services they need to be able to increase their capacity to grow. And on the flip side, they don't have access to a ready market for them to sell their commodities. Yes, we want the government to do a lot in terms of agricultural financing, but there's only a limit to what the government can do. So we need to find a way to bring in private capital, leveraging on the capital markets of countries we operate in, to ensure that agricultural activities could be financed in a transparent and sustainable manner, which brings values to both the smallholder farmers, the investor, and the country as a whole. Our company operates on three key pillars, right? Access and retention on one side for the smallholder farmers, data and analytics to aid in policy formulation and making decisions, and then efficient markets where we can efficiently price agricultural products and agricultural commodities as a whole.
Wonderful. Super excited to learn more about Apex and what you guys are doing. Folu, turn it over to you.
Yeah.
Sure. Thank you, and happy to be here. My name is Folu Okunade from Hello Tractor. I'm the CEO at Hello Tractor. Hello Tractor is more on the AgTech side than the fintech side, but we are running a couple pilots, chiefly with MasterCard on payments and fintech. So we're getting in the game. Hello Tractor is a startup. We started in Nigeria in 2015. Since then, we now operate in 10 African countries and 3 Asian countries. I'm based out of Nairobi, Kenya, which is where our second office is. Our core mission is to connect farmers who, as we all know, are in desperate need of mechanization services, among other things, with tractor owners that are using their tractor assets as on a contract basis. So we do this through an IoT-enabled device that allows farmers to go onto their mobile app, to their mobile phones, open up our app, and directly book tractor services on the app.
Wonderful. And then this bleeds quite well into kind of the intro I was going to give to the space, because at least from our perspective as an investor, having looked at ag globally across Africa, Latin America, Southeast Asia, we're seeing a really, from our perspective, financial services really underpin the success of a lot of different models. And so increasingly, we're seeing companies like Hello Tractor, but more broadly, ones working in inputs, logistics distribution, bringing in financial services in-house or partnering with banks or other FSPs to provide that, because that's what creates stickiness around their product or service. I think, for those who may not be immersed in the ag side, but more from fintech, the opportunity for agriculture in Africa is absolutely massive. More than 60% of the population of smaller farmers, more 60% of the population of Africa is smaller farmers, and as was already stated, 20% plus of GDP depends on Africa. A recent McKinsey report said that, with the right inputs, financial services, we could expect a 2 to 3 times increase in grains and other core products. So there's a massive amount of potential. And I think there's a lot of excitement and sometimes a little bit of hype around the opportunity for technology to drive that. However, the flip side of that, and we've seen this certainly during COVID, is that with 80% of the food supply in Africa depending on smallholder farmers, they have some of the highest risk and the highest susceptibility to shocks and stresses as a result of climate change and other issues. And so there is a kind of critical period over the next 10, 15 years of investment of trying to pull smallholder farmers to be sustainable business units through a variety of means, so that the food systems in Africa can be resilient and productive. So again, for us, I think what we're particularly excited about is the role fintech can play in resolving or adding value to the kind of 5 areas that we usually see as farmers having pain points. around knowledge and information, access to markets, access to inputs, access to financial services, and then access to productive assets. And that's usually kind of the pain points we see around a farmer. And again, from our perspective, addressing just one of those in a silo usually isn't productive. It requires addressing a few at the same time. So I'm really excited to have a conversation today and hear people's experience. We have an incredible panel here bringing different perspectives and just hear their perspectives on where financial services really can kind of make an impact and where maybe the verdict is still out. So I guess first I'd love to just start with a question to Eleni. Would love to hear a little bit more about again, where you see innovative technology having an impact on smallholder farmers from your perspective. Like, where do you see technology changing, access to or addressing some of these pain points I just mentioned? Yeah, would just love to hear what you're seeing in your incubator. I think you're on mute. Lenny, I think you're on mute.
Sorry about that. Yeah, so I was saying that there are some emerging technologies that we are exploring that have actually not only in the fintech space, but across the gamut of AgTech, been quite interesting. But if I sort of narrow down into the ag fintech space, then there are a few things that we've been exploring with our startups that I think are promising. We actually have a Hello Tractor type of company that is up and running in Ethiopia, but also we've been working with a company called Axiom Technologies. I think they're actually here at the summit. They were the winner of the Alpha Expo and the Startup World Cup competition last year at the Africa Fintech Summit. And their product is basically a credit scoring for the rural unbanked. So the idea is to use artificial intelligence, machine learning, to basically create a credit scoring for previously unbanked, primarily farmers who basically they're able to look at non-financial indicators, size of land, age, demographics, etc., to be able to create basically a credit scoring for somebody that has not previously been able to get a loan. And this is something that they're working with microfinance institutions in the rural areas as well as actually urban to roll it out. And it's been a pretty data intensive effort. And what's been the constraint is getting the data and building the data, because AI obviously needs so much data. And so they've been working with the Central Bank of Ethiopia, the National Bank, to be able to access some of the microfinance, like years of data to build that AI platform. And I think they're making headway. But I think these are the kinds of things that are pretty exciting. Another company that we've been working on has been exploring blockchain and smart contracts as a way to raise investment from urban dwellers or from anybody to inject capital into smallholder farming. So it's a company called Farmily, and the idea is, I can be sitting in the capital city, or for that matter, I can be anywhere in the world, and I want to own a little bit of a or invest in a smallholder farm. And so their platform on the blockchain is basically enabling a monitoring and tracing of what happens to the injection of capital, what happens on the farm, and then what happens at product sale, and so kind of creating a chain that is secure and reliable and transparent and so on. And so that's been also very exciting. We have also another play that is actually a pretty successful. It's taking off now, but it's a company called Yeras, which is setting up a live animals market, a virtual market for animals. Ethiopia has the largest livestock holding in Africa, and so the idea is to basically kind of do an e-logistics and also the payments platform. And then that traceable sort of, where's the animal, cattle, sheep, goats primarily, and then basically kind of work from the cattle yards that they are stockyard kind of that they're putting up. So there's a big physical component to that, but also the technology to be able to transfer, both the animal, but also the funds. So all of these are very much the latter, not so much an emerging technology, but they're all very much, I would say, fintech, and what did you call it? Ag fintech plays, and we've got a few more. But I think what's for me what I see as sort of the challenges, and Ethiopia is particularly challenging, is the integrity of the data, and also in our case, the fact that mobile payments and e-commerce in general is pretty nascent. So we're really still at the very beginning of what the potential is to grow in this space.
Wonderful, Nan. Akinyaka, I apologize if I keep mispronouncing it. I would love to hear your perspectives from AFEX. Oh, I think still on mute. You're on mute. Yeah. Nope. Maybe while we wait and meet, we could just go to Folu really quick. Yeah, Folu, I'd love to hear. I mean, you described yourselves as AgTech first, but it seems that intrinsic to your model is you're kind of refiguring out how an asset can be shared, which intrinsically has like a financial component to it, right? Because the farmer can't afford, nor is it economically viable for them to have their own tractor. Would love to hear how you think about yourselves in terms of, making accessible large assets that a farmer won't have, and then B, I'd love to hear more about the MasterCard pilot that you guys have.
Yeah, no, good question. And they're kind of, it's two very related models, but one obviously for the farmer and one for the tractor owner or the asset owner. So for the farmer, I think one of the things that we've seen is that, as you all know, with the size of the land that the farmer has, it just doesn't make any economic sense for them to own an asset like a tractor. And so that the sharing model really kind of works very well in that scenario. What we do though is, if you were to just implement the sharing model for every single smallholder farm, it still doesn't make economic sense, because now you're asking someone who just bought a $30,000 equipment to travel, 50 kilometers to do 2 hectares of land, right? The unit economics still don't add up. So someone actually just asked the question on the chat, and I just responded. We work a lot with youth booking agents. These are community agents who are part of the communities that they work, that they operate in. Their role is really to cluster the demand, right? Just as we have aggregation of farmers, we have clustering of farm demand as well. And the idea there is relatively simple, right? So if a tractor owner has to travel to do a piece of land, the unit economics becomes a lot better if you're doing 20 farmers nearby with 2 hectares each, instead of just one farmer with 2 hectares. And so that's kind of how we operate there. And we're in Kenya, for example, we're linked up with M-Pesa, so the payment side is worked out there. We're still working on some payment, integrated payment options, and that's one of the things that we're doing with MasterCard. But even more exciting with MasterCard actually is a tractor financing model that we call kind of our pay-as-you-go or pay-as-you-earn financing. And that's really to kind of make the ultimate goal of Hello Tractor come to life. The ultimate goal is, I know a lot of people aren't aware of it because we often talk about just the Uber model, but really what we believe is that there is a severe lack of mechanization inputs, so tractors and implements on the continent, and also in Southeast Asia as well. Nigeria alone has a deficit of 600 or 750,000 tractors. It's 150,000 in Kenya. So we believe that there's a supply deficit. Our model has us starting with the demand side to organize the demand a lot better, and therefore unlocking a lot more demand on the farmer side, right? Because if the farmer doesn't see that there's an alternative, they'll continue to use manual labor. Once they know that there's an alternative, the tractor owners are becoming more productive, their assets are becoming more productive, they're earning more money, they're serving more farmers, there's more demand out there. And we believe that soon enough, that demand is gonna outstrip the supply. And so we've been working on a tractor financing model that allows the tractor owner to actually, and it goes to what Eleni was saying as well, is really using data as collateral. Looking at the past 2, 3, 4 years of the tractor owners' activity on our platform, and seeing the work that they've done is often enough to finance a tractor. And so we've developed a model that allows you to take a book of work, take an asset, and pay as you do that work. And our model really has it that you can pay that off in 4 or 5 years, depending on the amount of down payment you have. So we're working on piloting that with MasterCard now, and the idea is to make it an even broader model across all 13 countries that we're in, plus more.
Great. I'd love to dig into that a little bit more, but just want to check if Akanika, are you there?
I think he's dropped.
I think he's dry. I still see him on my screen, but hopefully he can pop back in. I know he's having some technical difficulties. But yeah, just on that, following up that, Folu, I would love to hear, and Eleni, please feel free to jump in too. Certainly, we've had our share of investments that make big claims about using alternative data sets to make credit decisions, but it still seems like it's a far ways off, especially for rural smallholder farmers, before that can come to fruition. Would love to hear some of the challenges and maybe early successes you've had in validating those income streams, and maybe in particular with Hello Tractor, kind of what you see as your secret sauce to maybe crack that nut.
There is no secret sauce in this business, right? I wish there was. But I think for us, though, it's very direct, right? So, we are working with other institutions, kind of looking at, what else can we do with AI? What else can we do with kind of predictive analytics, right? To me, that's kind of a secondary way to get about credit or credit worthiness. For us, it's very simple, right? We know that you've been working 400 hectares last year, right? We can see it on our platform. We also know we have a route optimization tool that says you did 400, but you stayed in the same area. You could have kind of followed the reins and made 3 times that as well, right? And that comes from understanding the supply side. We see the tractors moving and working on our platform, but also understanding the demand side. We see we get the bookings from the farmers, so we know where the hotspots are at different times. So for us, it's a little bit more direct. We know the actual work you've done, and we know the potential of work that you could have done. And so kind of figuring out the credit worthiness, I guess, from that standpoint becomes a little bit more direct. But I hear your point. I think there's a lot more we can do. Like I said, we're working on looking at the data that we have, and bringing in some other data to maybe predict behavior a little bit more, a little bit better.
Yeah, and Eleni, I would love to hear, because
come on.
Oh,
okay.
Wonderful. Yeah, please.
Hi.
Hi.
Can you hear me now?
Yes, we can. Perfect.
Okay. I think I had some technical issue there. Yeah, sorry. So I was trying to piggyback on what Eleni said. And in the commodities exchange sector, we work in, LNE is one of the few names you hear once you start playing in this sector. And it's quite exciting seeing her play in addressing key issues that she identified earlier that are peculiar to the sector. Now, in Nigeria, so I'll use Nigeria as an example a lot because that's where we predominantly operate from currently. The smallholder farmers are highly underserved, but yes, they are very, very risky and they have a lot of things out of place for them. But you can't discount the fact that the productivity of the country and the food security of the country, and by extension for all smallholder farmers across the sector, depends on this sector, this set of people. So the question is, how do we ensure that the innovative solutions that are being brought on board are sustainable and they can remain applicable over the course of time, which is why I think the ag fintech theme is one that has come to stay, right? Agriculture has always been practiced for decades, right? We are not bringing any so-called new innovation in the space of agriculture, but we've discovered that technology could be used to enhance the productivity of smallholder farmers and their access to innovative solutions that gets to boost their productivity. But in the scope of all of this, without the appropriate financing, there's little you can do. And the question still remains that how far can the government go in financing smallholder farmers, right? And should it be left to the government alone, or is there a way to crowd in innovative solutions? Now, over the last couple of years, we've seen innovative solutions come on board in terms of financing of agricultural activities, from fintech companies coming up with innovative crowdfunding platforms that get to bring in millions of dollars into the sector, to using drones for monitoring what is going on the farm, and all these innovative solutions coming into the sector. But on the other hand, the question is, can you ensure the sustainability of the crowdfunding sector to drive productivity in the space, which I think is the missing link? For us at Apex, we have a lot of solution, and the pain points we try to fix is that of sustainable financing. Can you build a pool of funds where sustainable financing could be directed to the smallholder farmers, whilst ensuring that the underlying infrastructure are credible, transparent, and there's assurance of there's trust in the system that is being built, right? The downside of it is it's very, very capital intensive. You spend 5 to 6 years building the system before you start getting returns in the long run, right? But without those fundamental structures, it's going to be very difficult for you to build an innovative solution that is out there. Now we have startups operating, such as the ones LNA runs, that are providing these solutions across the sector. And the question is, how do we increase the scale of this? And how do we ensure that there's consistent innovation applied in an innovative manner to ensure the sustainability of this sector?
Yeah, please.
Tim, can I jump in on that? Just coming to the whole commodity exchange space, and if you think about it, the biggest asset we have in Africa is commodity itself, and so as an asset class. So I think that one of the things that when I was at the Ethiopia Commodity Exchange that we tried to move on, but unfortunately the Ethiopian financial sector did not enable us to go very far, but maybe in Nigeria you could go far, is warehouse receipt financing. And basically, using the warehouse receipt as collateral to finance, it's hard to do it for pre-production, but for post-production, like, post-production, what is it, processing or anything else, using the warehouse receipt as an asset once it's put into your Apex warehouses. So, and that's something that I think as we now move into blockchain, that's something that I think could lend itself pretty well to a blockchain technology. So that's something I would throw out as an exciting possibility. So all you ag techies out there, that's a pet project of mine that I'd like to explore further.
Wonderful. Yeah, just jumping on that, because I think one thing that's been mentioned, around the table has been around data, and it's very interesting to hear, what you were saying, Akinyaka at Apex, about how you look at like a data pool and how you can build that as robust that, I assume different people could plug into to make different decisions in products and services. Would love to hear kind of your thoughts around how do you build that in such a way where data privacy and so forth is adhered to and those concerns are met, and then B, it would seem that everybody's trying to create their own data sets to have an edge, right? So I assume Hello Tractor, you're creating your own data sets, which is kind of your IP, and you wouldn't be prone to want to share that with somebody else, even if they had a complementary good or service. So yeah, how do you look at kind of the vast streams of data available out there? What are the different models to allow fintechs or banks or other actors access it? And what do you think the future might look like 10 years down the line, if we construct the right kind of, I guess, data pool or data sharing agreements or whatever it is? Is it going to be driven by individual actors, or is this a government role, or is it some third option? I guess anybody can jump in. I know it's a big question, but
I think if I could try, I don't have the answer, so it's actually more questions from my side. But I think if we take the example, that example of some of our large American companies dealing with data, I think there's an opportunity here for the government to step out in front and define some regulations, in a playing field around data and data protection, data privacy. I noticed that Nigeria, as of I believe it was last year, has put out a data protection policy. Not sure if that's been fully rolled out, but I know it's out there. And Kenya has some data privacy policies as well. So I think there's an opportunity here for government and para-government institutions to kind of lay the playing field, because we're a private institution, but we're one of the good ones. But if you leave this up to private institutions, I think you'll probably get your Facebooks and who knows what else. So I think there's a role there. But what you were saying, Tim, as well, in terms of sharing data across different platforms, I see a large opportunity in applying blockchain to help resolve some of those costs of having to, everyone goes to the same farmer 5 or 6 or 200 times. The good thing for us as we work with farms is, even though we work with, in sort of a logistics sense, the farms don't move. So you're not kind of going back to the farm to get the data. And typically, if I grew maize one year, I'm probably growing maize the other year. I might add on 1 or 2 crops, but it doesn't change that much. So it's a one-time thing. But I do see a big role. We did a project with IBM on blockchain and trying to kind of crowd in a lot of these different data sources. So I think there's a large opportunity there.
So adding quickly to what Folu just said, right? I believe the government has a role to play in terms of setting the governance framework and the structure wherein your data structure operates within a jurisdiction, right? But I'm not very sure if the government is welcoming to blockchain technologies, right, that promotes visibility and transparency in that down to the last mile. Maybe because they don't have a full overview, or maybe it's something that goes outside of the government scope, right? If we're talking about data, personally, I think you can't trust the government to give you timely data, right? Because of a lot of inefficiencies and red tapes in the system. I believe private sector needs to take that and ensure that Gathering the data, making the right information available at the right time needs to be led by private sector. But to what extent should the role of the government be is where I still find it difficult to make a certain call on. We need blockchain to play a much more integrated role in the way agriculture is being financed, especially pre-production, like Eleni rightly mentioned, and which is the role I believe Hello Tractor plays in. But that place is still the most risky aspect of the value chain, which you see less people coming into play. But if you take a critical look at the data, when you finance real farmers, people that their business is solely farming, you discover that integrity at that level is very high. And when they access loans, they tend to have a higher repayment rate because that's their only source of livelihood, and they need to ensure the stream keep coming in. And blockchain is what would provide that to them on one hand. But how well should the government be involved at that level is where it's still a bit neither here nor there for me.
Hmm. May I
Wonderful.
jump in on that?
Please, yeah.
Yeah. Couple of things. One is that, agriculture is the least digitized sector probably in the world. There's a table I use sometimes of just the level of digitization of different sectors, and agriculture is literally at the bottom. So the opportunity for private, sector efforts to jump in on how to harness all the data points. So when a farmer sells, on an e-commerce, which they're not, but if they were, then that would be a place to reap data. When they lease the tractor, I mean, so there are many points where right now we're not actually getting the data. I mean, it was amazing to me that when the Axiom was trying to do this credit scoring, and they needed data, the first constraint they found out is that a lot of the rural farmer-facing MFIs were not digitized. Their data was not digitized. So in fact, their company is kind of evolved into an ancillary business of data digitization, offering digitization to the MFIs. So that's kind of where the starting point is that we're not even in the world of digitization at all, let
Yeah,
alone what we'll do with the data. So I think that's a point that we need to sort of emphasize, is that that's a business opportunity. There's a
exactly.
lack of digitization, that's an opportunity. Secondly,
Exactly.
what you do with the data, building the AI, the blockchain, the other things that we can do with the data. And I think that on that, Polu's absolutely right that we do need to have government step in with data protection legislation. Ethiopia's recently drafted the legislation, but I don't think it's yet passed, but hopefully it soon will. But that's really kind of, a constraint or a barrier of entry to cooperate with large corporates, the Googles and the others that basically can be interested in, and many others really, that can be interested in coming in as partners in all of this, but who are constrained by the lack of data protection. So I think we need to get governments aware that that's really something that they have to get right in order to enable a lot more private sector engagement in the data
Yeah.
business.
I want to pose another question, kind of a related topic. There's a lot of fintechs operating in the ag space that are trying to operate without the system, whether it's on the data side or trying to become the next neobank or go directly to farmers. But there is an existing financial system that is there and typically is seen as a little bit slower moving, risk averse, and so forth. I'd be curious to hear panelists' perspectives on, do you partner with MFIs and banks? Do you, lend off your own balance sheet? To what degree do you kind of ignore the current systems versus trying to optimize the current systems? So yeah, I mean, Folo, I'm not sure if it'd be great to hear, why you landed on your model versus perhaps, providing a service to, say, John Deere to lend themselves or something else. Just be curious to hear your perspectives on this.
So we do both. I think part of the innovation in financing, especially financing farmers, is you've got to have a suite of options, right? That folks can choose from depending on what makes sense to them. So we do work with the financing arms of large manufacturers, and our offering to them is not our financing model. They have their own. It's really our platform that allows them to have some data off of the assets that they're leasing. That same data is the data that we would rely on if we were doing the leasing ourselves as well. So you know, I see a role for different models and different actors, and with Hello Tractor, we're not we don't close the door to any to either partnering with a bank or a financial institution, or dealing with the leasing arms of large manufacturers. What we've seen though is, as a startup, we like to move fast, and we're nimble and we're agile. And I rip my non-existent hair off when I have to deal with large institutions that don't necessarily move as fast.
Hi, Tim. Unfortunately, I'm already over. Supposed to be at another event. I know we started a little bit later, so unfortunately, I'm going to have to say goodbye. But this has been an awesome conversation. So thank you so much. Tim. All right.
All right,
I don't
lady.
know. All right, bye. I think Tim is frozen. I'm not sure. Can you guys
Yeah,
see Tim?
he is.
Okay, well, say goodbye
Yes.
for me. All right.
All right, not a
Cheers.
problem.
All right. Thank you. Bye.
Bye. So Folu, taking up from where you left off, right? You know, in my opinion, I think commercial banks are beginning to realize the need for them to change their model right now, right? They're definitely too big to be able to play in this space, because if you look at so for us to get a bank to finance a smallholder farmer in Nigeria is practically an impossible task until you get an entity that could provide 110 guarantee, right? In terms of either cash or bond on the market. Or more, yeah, right. And this stops banks from being able to play in this sector, because I mean, they'd rather go for government bonds or attend to the big people with deep pockets to finance them. So the question is, how do we ensure we bring them on board if we need to bring them on board? The advent of fintech and crowdfunding platform is begging the question of how relevant are financials to our banks in the ecosystem of financing, coupled with the fact that most people that need this financing don't get it in a timely manner in the form they want without necessarily collateral. So the model is shifting more, right? Because recently there's a bank in Nigeria, one of the biggest banks, is changing its operational structure to move from a commercial bank to a holding company, right? Where they can spin up other services that could be as agile and nimble as competing crowdfunding platforms, right? Which shows that going the route of bank financing for agricultural activities is definitely not sustainable. Do we need banks to finance them? Yes, because they are the avenue wherein financing passes through, and then they can also bring some integrity in the structure due to the every regulation they bring on board and investors protection. But by and large, it's clear that in terms of core financing activities of smallholder farmers, the role of commercial banks will continue to decrease, at least in my opinion, over the long run, and you'll see more of crowdfunding platform and fintechs playing a much more inclusive role in this sector. And when this sector is matured enough, and when you have smallholder farmers in Africa being able to cultivate hundreds of hectares successfully, before you see the advent of banks coming on board to play in this sector.
Yeah, I mean, I think that traditionally you see this all across Africa. I know some banks are trying to be more nimble, but you know, the role that they play as traditional actors still lends them to be very very conservative and very risk averse. And to some degree, I get that, right? Obviously, you want to protect your money. But I do think I agree with you. I think there's a role now, and there probably will continue to be a role. They have large sums of capital to deploy. But the question is, how do we make it more feasible for them to be able to deploy that capital? And also, how do they trust new models of creditworthiness? I worked at banks in the U.S. And you hear a lot about the credit ratings and your credit scores. In lending, even banks in the U.S. have started going away from credit scores because it's not all too trustworthy. Two, it looks backwards, and no one's interested in looking backwards anymore. Just because you paid, last month doesn't mean that you'll pay this month. So a lot of the models that banks, even in the U.S., are developing, and I think some banks are catching up to that here as well, is that we need a model that looks at data from all different sources. That's partly where blockchain comes in as well. And then tries to kind of model what the future behavior will be, and that's the role of AI as well. So I think as banks kind of come on board with more technology and understand the landscape and understand that it's not just it's not just I give loans to this person because for a farm because they own 3 hotels in Lagos, and therefore they can pay. They have they can securitize it up to 3 or 4 times. But how do I look at the transactions and whether it's bank transactions or off-bank transactions that speak to the ability of this person to be able to finance, and then the terms need to be worked on, right? They need to be flexible. You can't have 30% down payment and 25% interest, compounded monthly. Like it doesn't work, right? So
it won't work. Yeah, it's funny because their requirements are so stringent. Yeah. Tim tried joining now, but I think he got cut off again. So hopefully he'll come on board soon.
That's okay. We could just keep talking. I think there might be some questions in the audience as well.
Yeah.
So.
Oh, okay. So, is there a way to bring in the audience on board?
I'm not sure. I think there's a Q&A.
Yeah.
All right.
Okay. So I mean, whilst we wait for the for questions to come on board, another part that I want to get your opinion on is it possible for you? Do you? So Hello Tractor provides services at the pre-production stage, right? Is it possible to securitize that service to ensure that we could bring capital to finance the smallholder farmers to drive that process? This assuming the core issues of cost and affordability are taken care of at the smallholder level.
Yeah, I mean, so you just have to be creative about what you use to securitize, right? So the way we're thinking of it, as I mentioned earlier, is really data as collateral, and transactional data as collateral. And so I think that I think the opportunity is there to be able to look at kind of previous activity of a farmer and determine, I guess, call it the creditworthiness of the farmer that way. I also think there's models out there. This is I don't think they're live yet, but there are people that are now starting to talk about things like in the U.S. again, just to use that example, you have in the mortgage market, you have a secondary mortgage market, which is really just packaging a bunch of home loans and securitizing them and selling them to other investors. I'm starting to hear more and more talk about that. I'd love to see the application of that in the ag space, of having sort of kind of a secondary, ag securitization market. But I think why not? That's a possibility. It goes to this clustering of an aggregation of demand. In this case, it's aggregation of financing. But it's not so much different from aggregation of financing in the mortgage market either. So
Yeah.
I'm excited to hear more and more people talk about that. I think there's an opportunity there.
Interesting. So the role of data is likely going to move from just being a source of information and decision making to securitization and financing, right? And that's an interesting concept because in this part of the world, yes, the digitization level is very low. We still have a long way to go, but even the data we sit on currently is not mined to the fullest capacity we could, right? So you say that. So for example, at Apex, we had to consciously get an AI expert on board to put in structure on 110,000 plus smallholder farmers that we sit on with their transactional information and make sense of it, right? So we need to be able to move from just using such data points as informational sources to being able to create a kind of securitization entity out of it that could be used for financing, right?
Yeah. Yeah, and I mean it's a tricky subject. I don't pretend to know everything about it, but I think it's certainly a topic worth exploring. You obviously don't want to, again, we want to learn the lessons from those that did it poorly. So you don't want to create a bubble that bursts. In this case, you're dealing with the livelihoods of people. And so I think you want to be careful about that, but I think it's a way to bring in more financing through the securitization of these aggregated assets.
Great.
Hi, Timothy, are you logged in okay? Is Tim logged in okay? I don't think he's in.
Yeah,
okay.
He's logged in, but maybe he's having connectivity issues.
Okay, I just wanted to just chime in here because we do have to wrap up this session. So hate to interrupt it. I love that you two just kind of took it over and started communicating with each other. Great panelists, thank you. I did want to pose and open it up to the audience briefly for some questions before we wrap it up. And there's this one here, I'm not sure if you saw this. What are the challenges in adapting financial products by small farmer holders? Did you address that one?
Okay, let me take a shot at it, right? So the key gap for me in addressing financing for smallholder farmers has always been availability of credible data to be able to put a face to who the smallholder farmers are. And then if you could plug this gap, then it's easier for you to get products that you get to customize for them to meet their specific needs. And this goes to my earlier point, right? Getting the information of the smallholder farmers is the first steps towards being able to have financing products that speak specifically to these smallholder farmers. And to do that is quite capital intensive because you literally have to build a whole infrastructure that connects to the smallholder farmers wherever they are, and then be able to get a system that captures their information where you can now mine the data out for specialized data creation on the back of that.
Paula, anything to add to that before we go on to the other one?
I mean, really no different from what Akin said or what we've been talking about, right? So it's digitization it's data. It's also a way to, going back to the securitization talk that we were just having slightly, but it's a way to find a way to treat smallholder farmers who are highly important, but from a commercial perspective, still have a long way to go. We need to find a way to treat smallholder farmers in a commercial way. And that can't happen, unfortunately. It can't happen smallholder by smallholder. It's got to be clustered. It's got to be aggregated. We've got to be able to treat them as a unit, and have a group of smallholder farmers that behave as a medium to large commercial farm.
Okay. And then we have, did you have a chance to go through the Q&A here? I noticed that you guys were going through the chat yourself, so.
It's quite difficult for me to navigate here.
there was another question here. How much of a role does logistics play in creating the ag fintech market, and who is doing this well right now?
I mean, a huge role. AgTech is great because it's one of those things, and people always hear the stat that, you know, in different countries it's a little different, but you know, it adds as much as a quarter to the GDP in some countries, right? It's not just because AgTech is about it's not just because agriculture is about farming. It's because agriculture touches pretty much every other industry, and so logistics has to be there to enable agriculture. Energy has to be there to enable agriculture, services, telecoms, like it's all wrapped up together, and that's why it contributes so much to the GDP.
Yeah. And you know when you don't have logistics in play, it just increases the transactional cost exponentially, which makes it inefficient for you to have viable products at that level, right? So there's a need for us to move, especially in sub-Saharan Africa, to move from pure road transportation to exploring innovative means of moving for warehousing and transportation, from rail systems to inland waterways to exploring intra-country movement, right? Which brings us back to the issue of AfCFTA, which promotes cross-border transactions around countries, which on the political side needs to be fixed to promote efficiencies, right? If you look at East Africa, for example, you look at that block, because of commodities movement, there are times when the southern part of East Africa would need some commodities that are in abundance in the northern part, but because there's no logistics in place to ensure ease of movement across this place, you see yourself in a position where you can maximize agriculture you have. And I still believe that technology could have the golden solution to this kind of issues as well.
100% technology has, you know, it's not the only solution, but it definitely enables, and we've seen that with a lot of startups that you guys have probably heard in, you know, getting a lot of funding in the logistics space. So it's happening, and like you said, it's happening because it's lowering the transaction costs.
All right, last question, and then we're wrapping it up. What, in your personal opinion, what do you think the role of government should be in large-scale farming to ensure food supply is secured at the continent level?
Set the rules and get out of the way.
Exactly, I second that.
All right, I see Tim logging back in right now. I'm not sure if you could hear us. Or if we
I can. Sorry about that. I had to go through 5 devices to get one that would work. So my apologies. Thanks, Ashley, for jumping in.
Oh, no worries. We do have to wrap up the session, but I'll leave it to you, Tim, to do that, okay? I'm going to hop out.
Well, thanks. I have to assume that the panelists had some groundbreaking insights while I was
Tim,
gone.
can you hear us?
I can hear you. Can you guys hear me?
Yeah.
Okay. So my apologies, but you know, thanks to Ashley and the team for jumping in, and at least certainly the first half really enjoyed the discussion, and I think
I still think you still have some technical issues on this end.
I can hear it.
Yeah, we could hear him.
Anyway, just wrapping up, you know, again, appreciate the audience's questions, appreciate the insights from the different panelists, you know, particularly on the different opportunities for partnerships, for certainly on the data side, role of government and food security and how that plays into fintech plus agtech. And very much look forward to continuing the discussion. And I think, you know, we can probably share our contact details or respond to some of the people that have inputted questions here. But thank you for joining. I look forward to meeting on the sidelines of the rest of the conference.
All right. Thank you. For everybody in the session right now, we are going to be having a fireside chat happening right now, actually, in the main stage on African-founded and funded funds. Check it out. Thank you.
Take care.
Bye.
Cheers. Thank you.